Aloha and welcome to Java. Thank you very kindly for joining me again. Today is Thursday, it's April 18th, 2024. So there's quite a bit to go over today, so I'm going to start right into the markets as always. Our risk is still in extreme territory, although it's pulled back a slight bit. So we're still watching relative strength of the dollar. It's now below the 106 at least, so it did set for pullback. And I'll talk about what that means for the stocks in a moment. We are in the fear range, which could go into the extreme fear range at any moment. So, with this dollar strength dropping back as well as the 10-year yield, it could give a little room to breathe for the stocks because they all closed in the red. Bears are in control now at this trend and the market. So we've got volatility index is at a high. Gold starting to move also again back above the 2,400 level. And we've got oil under a bit of pressure. Now, this is a lot on not just supply, but also Middle East tensions that is being very volatile. So we've got the futures also showing that the equities may get a breath of life today for a short bit. But we've got some things on the horizon to watch. So, as this states, the bond volatility is darkening the outlook for stocks. Basically, this is putting pressure onto that fear. And treasury yields, even though they were lower on Wednesday, the 10-year yield was at 4.59%. Market doesn't like that high, and it could head towards 5. So the US dollar again on its strength. So we'll keep an eye on those. I'd like to put in a short note here. If you're a trader and you have to understand who you're trading against, the retail traders of single traders out there are the minority. And basically, the big money, which is either hedge funds, 401ks, larger companies like BlackRock, they can move in an instant large sums of money. And they do this with automated stops and they use automated algorithms. So if you don't understand that you are trading against basically artificial intelligence, robots, other things, algorithms, then you may want to strongly consider sitting in the sidelines for this next few days for this volatility. Basically, the moves that can happen can be very rapid and very extreme. The volatility can, as we just saw, sort of a slight warning in instance. So, moving into our calendar for today, we are expecting jobless claims prior to the market open, as well as manufacturing. We've got some Fed presidents speaking today and supposedly looking at the leading economic indicators. 10 a.m., those really have not meant much of late. Really not good indicators at all, really. So we've got earnings coming out from Netflix, Blackstone, which is a big one, Ally Financial, and TSM, Taiwan Semiconductors. They're expecting to do pretty well. Also on watch is Tesla. We'll talk about them in a little while. Google should be added to this list for similar reasons. And Alcoa. Now that's on the back of the sanctions for Russian metals. So, as the VIX has surged, so VIX is basically the volatility index of the stock market, demand for VIX linked option contracts has risen with it. So, traders now beginning to bet on this volatility, and its highest volume more than 6 years on Friday. So, this is what I want to point out. The value of this VIX is based on the activity and amount of options tied to the S&P 500 that expires over the next month. So kind of an indicator going forward of the sentiment in the market, in the trading market, which is different than the economy. So moving into banks, we've got the economic buffers have been exhausted. So they're basically talking about the banks' ability to step in. Now they can still, but it would take a huge intervention now, meaning central bank movements, Federal Reserve. Smaller banks are really the options are dwindling. So going on to US regional banks, they're still seeing more commercial property losses. So they're getting hit again. Commercial property losses, also banking credit defaults, smaller consumer credit defaults are mounting up. So this is really, it's a ticking time bomb. The debt is really racking up. So we've got the European Central Bank saying they are crystal clear on a June rate cut. So they're trying to allay fears and bolster this up from the other side by promising that in June they will cut rates. We'll see what happens. So we've also got this warning, and this kind of quietly went under the radar. But the Basel chair urging banks to fully implement capital rules as soon as possible. If you don't understand what this means, the translation means that they are going to regulate how much money you can take out of the bank at a time. So capital controls, capital means money. And if they control that, you go to the bank, you ask for your money out, they're either going to give you a hard time about it, limit it, not give it to you. Many banks have limits right now. So if you have money in the bank that you don't need to be in there immediately for bills, get it out as soon as possible. They're looking at locking it down. And this is not just the United States, this is Western Europe as well. So going into our stories about the real economy, Illinois factories hit hard by factory layoffs, shutdowns impacting over 1,000 workers. So this area is getting hit really hard. There's more companies that are going to show this forward. So we're going to be going into unemployment here. One moment. So Google, and this is why I was saying they should be on our list. They're doing more layoffs, talking about broader restructuring. Along with this restructuring, they're also talking about going into India, Mexico, and Ireland, talking about building growth hubs. So India and Mexico are famous for having lower rate labor. They're not going to have so much luck with that in Ireland, but there are other advantages there, I suppose. And they do have a hub to the European area. So, but looking at this, they are talking about an unspecified number of layoffs affecting teams in finance, including treasury, business services, revenue cash operations. So these are some core services. And we're going to talk about Google a little bit more in a moment. So we've also got LL Bean beginning to announce layoffs. And we've got Tesla, who came with the big surprise. Now, they're talking about dropping 10% of the global workforce. This is huge. More importantly, though, was the way that they basically implemented this was they sent out an email 3 o'clock in the morning to their employees, and it was a shock. So with the layoffs, they also they cut some higher end people, talking about some really quality and upper players, so to speak. So this is not just lower end workers that they're cutting. But if they shock the system like this, it cuts confidence. And that's a very important factor. It's not just the job behind it, but now this is going to cause economic ripples, basically other people getting nervous as well. So hitting broader markets with this. Okay, moving into basically mortgages and real estate. So this search has spiked on Google. Basically, how many mortgage payments can I miss before foreclosure? So this is a good indicator of how things are kind of winding up. So I listed some of the states with highest property taxes and what they are. So Iowa, Nebraska, Wisconsin, Texas, New York, Vermont, New Hampshire, Connecticut, Illinois, and New Jersey hitting out that top rate there, 2.33. This is property tax. That's also going to be hitting mortgages affecting sales. Property tax will increase. We've also got Freddie Mac stepping in to do basically secondary home loans, so getting into the mortgage market again. government stepping in where private sector should be. So they're basically encouraging people to take any equity they possibly have out of their homes and covering it through the United States government taxpayers again. So going into our wars and trade wars, we've got Asia bracing for unwanted foreign exchange battle, so currency wars, in a race to the bottom. We have the new Fed outlook leaving the world edgy on currencies because basically talking about rate hikes affects the strength of their relative currency, whatever it may be. That's why we talk about how there has to be cuts from the EU at the same time or prior to. So we've got Mester saying the Fed can hold rates steady and they're not in a hurry to cut. So that's making others nervous. So moving into the trade wars, Iran is now sharing agricultural experiences with Venezuela. So we're watching food agriculture ramp up. And as I was talking about yesterday, this story just came out. Iran and European Union trading reaching 380 million euros in January. So as much as they talk about cutting them off, they're doing direct trade deals because they need them. We've got Iran oil exports have hit 6 years high as the West prepares sanctions. So just like the Russian sanctions, we're actually just going to bring them a great amount of economic, upturns. So it's good for them. So a couple of lava updates. I'm going to call this the race for your face. So what am I talking about? This first one. So I got this ad from Google Play talking about how now I can set my biometrics, fingerprint or face as purchase verification on either mobile devices that have biometric capability. So, yeah, you can go ahead and guess what I say to that. Anyway, we've also got this came out from Copilot. So the two are, if you don't know already, Google versus Microsoft. Copilot is Microsoft's artificial intelligence. This is a race to feed artificial intelligence with your data. And we've got Microsoft saying Copilot app just suddenly shows up on your PC. Don't worry about it. Don't worry about the tracking. Don't worry about the data that they're gathering or the terms of service that you are quietly bound to and that you are feeding their artificial intelligence, because the more data, the better they do. So, had this other, which is kind of an embarrassment, but is Ireland a sleepy backdoor providing China with access to global DNA banks? What are they talking about? Their national security, talking about basically genes. This company called Genuity, Irish state-backed genomics firm, and they are holding all of the data. Basically, through Medicines Ireland, they have taken DNA samples from tens of thousands of Irish people. They are basically trying to genetically profile a minimum of a tenth of the population. And they've already got this data stored. So now this company is now linked with WuXi and Chinese government. So that as soon as that data goes, you can't get it back. And it only takes 2% of the population to be able to do genetic profiling. What does this mean? This also is a threat to the UK as well as the United States populations, because they would be able to profile a good majority of them as well through this. So I'm going to leave you on that note. And with that, I wish you a wonderful day, a green trading day in general. If you could like and subscribe, I thank you all very kindly for being here. And until I see you again, stay free.